Hi. Welcome to this Credit 101 presentation where we're going to pretty much go over a generalized idea of how the credit system works, go over your credit profiles, go over a few terms, things of that nature that you may be familiar with. But this is just like a basic overview of how credit works. I'm Eric, the credit guy, as you can see on this particular screen. I'm a board certified credit consultant through the Credit Consulting Association. I'm also a certified financial education instructor from the National Financial Educators Council. As you can see, this particular slides do come from them and how we're going to go over the credit system. I'm also score certified through the Credit Consulting Association as well. Now let's go over some credit profile basics, right? So this is basically what your credit profile consists of. But before we do that, I'm pretty certain that you've heard the term credit used in several different ways. For example, credit history, credit score, credit reports, credit bureaus, credit profile, you name it. You've probably heard that word credit thrown around several different ways. But here's the definition of those terms. Let's talk about credit history. What exactly is your credit history? Credit history pretty much is information about how you have managed your debt. And then let's talk about credit bureaus. In the laws, there's really no such thing as a credit bureau. They're actually consumer reporting agencies, but credit bureaus are a term that's thrown around a lot. And it's basically defining companies that collect information about your debt. And that's pretty much what the consumer reporting agencies or credit bureaus are. Now let's talk about credit score. Now your credit score is just a numerical representation of your credit worthiness. That's all the credit score is. And let's talk about credit reports. Credit report is basically a summary of your credit history and your scores. These three names on the screen right now, you probably are familiar with. There are some smaller consumer reporting agencies as well, but we're not going to discuss those in this particular generalized basic 101 credit presentation. The ones that you're probably familiar with are like Experian, TransUnion, and Equifax. Now, before we can get a complete understanding of this whole credit thing, we got to understand how buying on credit actually works. Okay. I'm going to start out with you. You're going to go into a merchant place, a store, or something online, and you're going to make a purchase, but you don't have the cash flow to make the purchase. And if you're making it online, you're going to have to use something digital anyway. So you're going to make your purchase, you're going to make it on credit, right? In doing that, someone is actually lending you the money to make the payment to the merchant, and in hopes later on you are going to make that payment back to them plus interest to that lender. That's pretty much how buying on credit works. Now let's discuss your credit profile. Here's something you must always keep in mind. Credit can affect several different areas of your life: job applications, access to more money or capital, your loan terms, your home, and of course, when you're dealing with financials, it's going to get a little emotional. So it's going to affect your emotions as well. Now let's talk about the different types of credit. You got good credit, and good credit translates to better loan terms, lower interest rates, and lower payments, and you get more loan options. As you know, there's benefits and consequences of credit, and this is one of the benefits of having good credit. Bad credit, on the other hand, it translates to limited loan options, higher interest rates and higher payments, larger down payment requirements. Here are some of the common sources of negative credit, right? Bad credit, poor repayment histories with missed or late payments, amount owed is too high in relation to your income, length of credit is too short, your credit inquiries from applying for too many accounts is affecting your scores. Credit mix is not well balanced across account types. And we'll get into that a little bit later, probably in a different presentation. Now let's understand your credit profile. Your credit profile or your credit reports includes the following information about each account. It's going to include the date the account was opened. It's going to include the type of account, whether it's an installment account or revolving account. It's going to include whether it's a joint account or an individual account. It's going to take into account your balance, when the last payment was made, any past due information, your limit, your credit limit, your account limit, any additional terms, the account status. Okay, this is very important. Whether you're current and open, closed, charged off, sent for collection. Now, all of that goes into an algorithm that calculates your credit score. There's two algorithms that we are mainly going to discuss here because the other ones, some businesses may have, some creditors may have internal scoring models. But the main two that you may be familiar with is FICO or the Fair Isaac Corporation. And these score models are independent from the consumer reporting agencies, also known as the bureaus. Then you have the Vantage score. But the Vantage score is a joint venture among the bureaus. You see, Vantage score was created by the big three, TransUnion, Experian, Equifax, and they were put this particular score model together trying to um, rival FICO. Now, this is how the credit reporting agencies produces reports. We got TransUnion, Equifax, and Experian, right? So they have all of these, they're data aggregators. So they have all of this raw data in their databases. And they run this raw data through these two pieces of software that are installed there, depending on who the creditor is using for their scoring model, right? So they run all this raw data through these two algorithms, okay, whether it's FICO or Vantage Score. And they run through that algorithm and a report is presented, is created as well as scores. And that's pretty much explaining how your credit score was determined, similar to the same way that your report was determined. Those that raw data is ran through these two different algorithms and a score is produced as well as that report. This is just another representation of that same slide we just seen before. Now let's talk about the FICO grading system. Now, what's very, very important here is we've all seen the FICO chart, right? And it's been explained in a certain way where everyone believes the FICO chart is specifically talking about their particular situation. But FICO tends to generalize everybody, right? So these numbers, these percentages are a synopsis of everybody's score in the country. All right. So if we look at this, 35% of your credit score comes from how you pay your bills. It's your payment history. And then 30% of that credit score is how much you owe. And then you got 15% of your credit score is how long you've had credit, it's the length of your credit history. 10% of your credit score is new credit accounts. A lot of people like to say inquiries. That's not true. This is based on your new accounts. Okay, so it's not going to be based on inquiries. It's the new credit accounts. And then 10% of your credit score is going to be the type of accounts, whether it's going to be revolving account or an installment. Now let's look at Vantage. Vantage, as you can tell, is a little bit different. 40% of the score is payment history. 21% of the score is length of credit history and types of credit. So they've combined a section here. 20% is credit utilization. 11% is the amount owed. That's interesting. Credit utilization, amount owed, right? Credit utilization, how much, what's the ratio of balance to limit? Amount owed, how much do you owe total on across all of your accounts? 5% of your score, new credit accounts, not inquiries, new credit accounts, which means you can have an inquiry and not get the account. Get it? New credit account, brand new accounts. 3% available credit. That's interesting too, because we got credit utilization here, right? But we also got a percentage for available credit. How you use your accounts is being part of the algorithm. And how much credit do you have available right now is another part of the algorithm. That's interesting. Let's take a look at the credit score range. You're almost kind of similar between the two, but there are some differences here. What FICO call exceptional credit is an 800 to 850. Vantage score calls excellent credit 750 to 850. So there's a 100-point swing there, opposed to 50 points on FICO side. Now FICO calls very good credit 740 to 799, while Vantage calls good credit 700 to 749. FICO calls good credit 670 to 739. Vantage calls fair credit 650 to 699. FICO calls fair credit 580 to 669. And Vantage call poor credit 550 to 649. And then FICO gives you poor credit at 300 to 579. Very poor credit on the Vantage side, 300 to 549. Now, let's go over some tips for getting and keeping your credit great. Okay. Number one, pay all your bills on time. Late payments, 35% of that score on average across the country. Late payments, not good. Pay all your bills on time. Number two, keep your debt low. All right. Try to pay down your debt. Chances are, if you pay down your debt, those obligations are gone. You're going to be able to make your bill payments on time. Maintain a good credit score. Once you get that credit score to where you want it to be, work on keeping it there or improving it. Keep inquiries to a minimum. Only apply for credit if you absolutely need it. Because if you apply, you might get that account. And getting a new account will affect your credit score. And our goal here is to keep your credit score right where you want it, maintain a good credit score, and or improve it. Here's an interesting one. Have health and auto insurance. Why is that important? Things happen. Insurance is exactly that, in case something happened. The number one of the major reasons of bankruptcy filings in this country is due to medical debt. Okay, so having health insurance will help you there. Auto insurance is another one. You get into a car wreck, you total your car, or you wreck your car and your car's not worth what you owe on the debt, you don't have gap insurance, you're in trouble. If you don't have any insurance, you're even in more trouble. And if you don't have sufficient insurance and it's your fault of the accident, you have to pay for the other person's car, you're in trouble there too. You may end up getting to file some lawsuits filed on you, some liens placed on you, some stuff placed on your credit for collections, things of that nature. So that's why it's very important to have not just insurance, health and auto insurance, but have adequate insurance as well. And here's a very, very important thing you want to do as well is check your credit at least. Notice I said at least. Not it says once a year here, but I'm saying at least once a year. With the amount of stuff going on in this world, you definitely want to keep on top of what's actually on your credit reports. One of the good topics or one of the good things to staying on top of your credits is to have a good credit plan. So here's an element of a credit plan. Obtain your credit reports, we just mentioned. Identify areas to address, set up a review account automations, review insurance coverage, and consider credit protection. Okay, we're going to go over a few of these. Sample credit plans. Your credit reports. Pull from all three credit reporting agencies at least once. Get one from each CRA every 4 months. Okay. Credit score. Free scores from a company, which means, say, for instance, if you have a go to Experian.com and they offer a program that you subscribe to one of theirs and give you the free Experian account, free Experian score, get it there. You may even go to um, Discover's dashboard. They'll give you a FICO 8 credit score too. I believe they're pulling from Experian data, if not mistaken, at no charge. So you don't have to have a um, Discover card. They'll give it to you, or your bank may even give you credit score, right? So look at the options of having a credit score, or you can purchase an accurate credit score from myfico.com or some other credit monitoring services out there as well that will provide that to you. I'm going to give you one here a little bit shortly. If might as well, you can go to reports.blueribboncreditconsulting.com. That's reports.blueribboncreditconsulting.com. And you can get your credit reports, all three of them from all three credit reporting agencies, consumer reporting agencies, as well as your FICO 8 scores on all three. The next thing you're going to want to do is review the data for accuracy. You want to make sure everything on your report is accurate. Okay. You're going to start a credit report file, right? It's very important to you will get a credit report file, which means that you're going to put a file together where you're going to be able to go over this stuff at least every 4 months to make sure everything is accurate, to see where you're at. If you're going through a credit restoration process, you can see where you're at it there as well, and you're going to keep track of everything. You're going to look for trends and identify long-term solutions, right? And you're going to monitor regularly and set reminders. Let's talk about accessing your credit report. I just gave you one way of doing it. Another way you can go to annualcreditreport.com. I believe right now they're offering it on a weekly basis. Click on request your free credit reports, enter your personal information, and click next. Choose the credit reporting agency from which to request your reports, verify information, access your free reports, print or save as PDF. The thing here is annualcreditreport.com, they do not offer you scores. It's going to be just the consumer reports, no scores. The option I gave you at reports.blueribboncreditconsulting.com will give you the reports as well as your scores. Now we're going to look into addressing problems with your credit. It's going to be very, very important that once you've gone over, it's time to take action. Request and review your credit reports. Note any incorrect information. Know how long a negative item will stay on your report. Act quickly to address fraudulent activity. Report fraud to the lender, the reporting agencies, and the FDC. Now, how you address errors. Number one, step one, get familiar with dispute methods. Step two, dispute incorrect information in writing. Submit a report to the FTC identity theft website if it is identity theft. Step three, reevaluate your behaviors. Okay, this is very important. Some things you may need to step away from. Stop purchasing, things of that nature, right? Because if you carrying high balances or you're missing payments, you may want to reevaluate some things, how you can get yourself back on track. Number four, consider whether to hire a financial service or credit repair firm. Here's a few services to aid in credit recovery. You got credit repair agencies. They will dispute credit report errors on your behalf. Consumer credit counseling provides guidance to improve debt and financial circumstances. You've got debt consolidation companies, which issue loans to group all your debt into payments. What I, yeah, you got to be very careful on the debt consolidation companies. Then you got your debt settlement. Then negotiate with creditors to reduce amounts you owe. Between these two, you got to be very, very, very careful here. Debt consolidation companies, okay, you make sure they're the ones that's going to issue a loan to pay off your debt and you pay them on a monthly basis. Debt settlement companies, they can do more harm than good. They normally would have you not pay your bills anymore, so they can possibly put all your bills into default, and they can try to negotiate lower payments, lower amounts with your creditors, because they figure the creditors will take something over nothing, but this is destroying your credit. Yeah, so you got to be very, very careful with these people. Now, how do you begin your credit repair journey? Step one, adjust your budget and set payment schedules. All right. Step two, negotiate settlements with collection agencies. Step two, only come later on in the process once you've done a few other things first. But if all else fails, settlement with collection agencies. Step three, inquire about settlement options, payment plans, and reduced interest rates. That's what your original creditors. Step four, prioritize your debt. Right, get yourself a budget in place and figure out how you're going to attack this. Step five, know your rights. It's very important that you get familiar with the FCRA, Federal Credit Reporting Act, and the FDCPA, Federal Debt Collectors Practices Act. Modify your action plan as your affairs change. So you're always going to have some wiggle room to modify. What's very, very, very important here is you got to make a commitment. Make a commitment to improve or maintain your credit score. Your car needs regular maintenance, and so does your credit score. Take time to understand how your score works and check on it regularly. Take actions to keep your credit score healthy. This is a very, 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 as you can tell, is very important. Identity theft protection is very important because identity theft is on the rise. I am constantly, constantly getting notifications from my credit monitoring service that my information has been found on the dark web. With the amount, of data breaches going on at major companies, I would be surprised if your information is not on the dark web. So identity theft protection is extremely important in this day and age. Don't believe me? Take a look at this. Prevalence of ID theft: 765,484 vehicle thefts, right? And this is information based on the FBI's Uniform Crime Reports, U.S. Department of Justice, Bureau of Justice Statistics, right? Look at this. 765,484 vehicle thefts, 1,515,096 home burglaries. Identity theft, 17,600,000. See how important this is? The annual cost of ID theft, 15.4 billion for identity theft, according to the Bureau of Justice Statistics. 9.5 billion total for burglary and motor vehicle theft. So if you add home burglaries and vehicle thefts together, they still don't equal or surpass the amount of money identity theft has cost. Now, there's three forms of identity theft: unauthorized use of an existing account, using your personal information to open a new account, misuse of your personal information to commit fraud. I have had this happen. I was applying for something and I forgot and left one of my files open. And I get an alert via email that's I get an alert from my monitoring company said that this particular company pulled my credit. I'm like, okay, why would they pull my credit? I don't have an account with them. And then from an old email account, I found that this person had went ahead and ordered a Lenovo laptop for 1,700 bucks, right? On credit. So they'd gotten an approval, got an account created, and ordered himself a Lenovo laptop for 1,700 bucks. Being that I had my credit monitoring stuff alerted me to it, I immediately logged in and figured out who this company was, gave them a call, shut that account down, right? And called Lenovo to cancel that laptop and cancel that account. But mind you, not only did they try to purchase a laptop from Lenovo, not try, but they had purchased a laptop from Lenovo. They also went and applied for several other credit cards, right? So basically, what they're going to do in that situation is once that Lenovo laptop shipped, they would call the Lenovo and request that the delivery address gets changed to their address, right? So at that point, that laptop would have gone to wherever it was. I would have gotten a bill at my address saying that I owe Lenovo 1,700 bucks for a laptop that I never got. So very important to stay on top of your identity when it comes to identity theft, right? So I immediately locked my credit reports back because it was my fault. I left it unlocked. Had I had it locked, this situation would not have happened. Now, how identity thieves steal your information? Number one, mail theft, stealing your personal wallet, stealing data from an old phone or computer, redirecting you to a fraudulent website. It's called phishing. Getting you to upload a virus that records your keystrokes, phone and email scams. Anything else coming? Social security identity. Okay, types identity theft. But something in the slide was missing. I forgot to add on the other one was data breaches, because that's the majority of the places that this information is coming from nowadays. It's going to all be data breaches. But here's the types of identity theft: Social security identity theft, driver license identity theft, financial identity theft, accessing your bank account, credit card fraud, opening new lines of credit or debit cards. That's the one I was a victim to. Medical identity theft, children's identity thefts. All those CPNs out there that you're hearing about, get a new credit profile, something called a CPN. Chances are they're using social security numbers from kids or either dead people. Criminal identity theft. Here's some ways you can get identity theft prevention: credit and debit cards. Don't give personal information over the phone. Guard account information. Oh, let me back up. Don't give personal information over the phone. Okay. So if you get a phone call from someone saying they work for XYZ Bank or the IRS or some federal government agencies, don't give them any personal information on the phone. Hang up and call a known number that you have for that particular company if you're doing business with them, and verify if they are the ones in contact with you. Also put to something called 2FA, two-factor authentication to all your accounts. So that keeps them from being able to get into any of your accounts without 2FA happening. So you'll get an alert on your phone or wherever, however you're using 2FA to be able to access that account. Okay. Guard account information. Report lost cards immediately. Cut up expired cards thoroughly. Put up their shredder. Don't carry cards unless you'll need them, and never carry your PIN with your card. So don't ever carry any credit card pins or debit card pins with your card. Identity theft protection prevention documents. Keep personal documents locked and hidden. Don't carry social security number or account numbers with you. Shred or destroy documents with personal or account information at all times. When you're done with it, please shred. Identity theft prevention on the internet. Never access financial accounts from public computers or via public access Wi-Fi. Very, very, very important. Okay, don't ever do it. You can go in Starbucks and someone could be sitting in the hacker can be sitting in Starbucks, broadcasting out as they saying that it's a Starbucks Wi-Fi, and it's not. It's actually some spoofed Wi-Fi that's running through their computer, and they're recording everything that you do on yours. So if you access your bank account, they're recording that. They're going to record everything, and all options. If you're going to go on the public Wi-Fi, use a VPN. Do not open email attachments from unknown senders. Delete all suspicious emails. Be aware of URL spoofing. URL spoofing means it's a URL that appears to be something that it's not. It's going to take you somewhere completely different. Um, That's another thing. The shortened URLs, they're very dangerous as well. If you're not familiar with the person's giving you a shortened URL, I wouldn't suggest you going to those. Um, ensure that all websites where you have personal information are secured. And the way you can tell that the website is secured, it'll have an HTTPS at the beginning, and it will have a lock up in your browser. Some people would do HTTPS, but then you'll see some weird icon up there by the on the browser where the address bar is. It'll let you know if you hover over it. It'll tell you if the certificate for that particular website is secured. It'll tell you if that certificate is expired as well. You don't want to deal with expired security certificates either. So if you know who that person's website is, you might want to let them know, hey, your certificate expired. I don't trust your site. Don't put any personal information on that. View certificates if you're uncertain about the website security. It's something I actually just mentioned. So you can always view the certificate. Just click on that, either the little lock that's up there by the address bar or whatever icons up there when you put in an HTTPS address, and it'll take you to the certificate. You can actually read that security certificate. All right. Ask yourself, why do they need my personal information? This is very important. Why is this website asking me for this? Identity theft prevention through the phone. Never provide personal information by phone unless you've actually called that particular company and you are 100% certain that that is the company that you're dealing with, like your bank, like your credit card company, things of that nature. It's only certain things that they're going to ask you anyway. So be accustomed to what they normally ask. All right. The IRS will never call you to demand payment or threaten you with criminal actions. Remember that. That's a scam that goes along all the time. The automated calls saying, I'm the IRS, blah, blah, blah. IRS is not going to call you. They normally communicate via mail. Be suspicious when a caller is aggressive, threatening, or demand urgent action. These are all red flags. Now, how to prepare for identity theft recovery. Research credit monitoring services. The one I gave you has a $1 million identity theft protection policy, recovery policy. Be ready to freeze your credit reports with the CRAs. Like I mentioned, I left mine open and somebody tried to get me. Have communications ready to dispute fraudulent charges. Exactly what I did. Business and lenders, credit agencies. Okay. List all services that would be affected by account cancellation. So if you have to cancel your account, you may want to know who you have on auto payment, right? So if you have to cancel your debit card or cancel the credit card, you want to look to see who you have on auto payment because it's going to affect those too. And you want to make sure that they don't get affected and possibly damage your credit. As you can see, this is the end of our presentation. If you would like for us here at Blue Ribbon Credit Consulting to assist you with um, going over your credit profile, feel free to book a consultation. That consultation can be done at book.blueribboncreditconsulting.com. Again, it's book.blueribboncreditconsulting.com. You go ahead and book yourself a credit consultation with us. And for doing so, you get a 5-night stay in Cancun, Mexico. I hope you found this information very informative, and we look forward to hearing from you.